Good morning, welcome to Money Markets. Today we're going to be focused again on Trump's tariffs, the implications for markets, and also looking to the week ahead. On Friday, we briefly discussed how the US labour market is trending. We saw the latest US jobs data for January, which saw unemployment tick lower at 4%. This is its 7th month low, and we can see how it's been trending on the chart in front of you. We also saw the number of jobs added in January coming in at just over 110,000, slightly weaker than expected, but the data very much supporting a robust US labour market. And you're seeing wage growth far exceed inflation, which should continue to help the ongoing strength in consumer spending. Now that came out on Friday, and it quickly went into the background as Donald Trump announced his plans for further tariffs on Friday, which could come into place as early as today and tomorrow. Now these tariffs are reciprocal tariffs, and it will affect a number of countries that are already applying their own tariffs on US exports. It's worth just reflecting that whilst these tariffs and announcements did somewhat spook equity and bond markets on Friday, that Trump had previously been planning a 10 to 20% universal tariff on all inputs. So this does give the opportunity for countries to negotiate with Trump before he places these tariffs on. So it'll continue to influence markets near term, but there will be also some important events this week that markets will also be focusing on. On Wednesday, we'll get the latest US inflation report. Expectations are for headline inflation to remain stable at 2.9%. It's worth just reflecting on inflation. We've seen on Friday a well-followed survey measure of inflation coming from the University of Michigan, which we have in front of you. Inflation expectations over the next 12 months have pushed materially higher, now above 4%, and that survey participants somewhat influenced by Trump's tariff policies. Also this week, in focus for the UK this time, will be economic growth data. We'll have the GDP report for the fourth quarter of last year. Expectations are that growth actually contracted minus 0.1%, and therefore somewhat supports why the Bank of England actually halved its growth forecast for the UK last week, coming in for expectations now only expecting a 0.75% growth for the UK economy this week. So a bit of a challenge for the UK and for the Chancellor Rachel Reeves, but we'll keep you up to date with the developments throughout the course of this week.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.